All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great week, great Monday, Tuesday, Wednesday, whatever day it is for you. It's Friday here. It's always Friday on the Real Estate Investing Club because that's when we record our episodes. So we're bringing that good Friday energy for you. Nice and cloudy. That's how we like it here in Seattle. So it's a good day for a second reason because we have John Bianchi with us on the show. He is up in Canada on the other side of the continent in I didn't even get the name of the Toronto, right? You said you're in Toronto.
3 hours away from Toronto and about a really, really small beach town. Yeah.
There you go. So he's on the other side of the continent, and he is into short-term rentals, which is awesome. I've almost pulled the trigger on so many short-term rentals just because I like the idea of it. I haven't done it yet. So it's going to be a good show because you're going to be able to school me on how to run them. So John, thanks for hopping on the show.
Thanks, man. I appreciate you having me. If you don't mind, I'd love to throw a question at you real quick. Why haven't you pulled the trigger?
So I invest in self-storage and mobile home RV. And I just, every time I get to the point where I am going to buy a short term, I'm always like, no, I should just focus on what I'm good at. We actually had one under contract that my fiance and I that we were going to buy. And at the last minute, another deal came up. We were going to buy this with our own personal money. And another deal came up. It was a self-storage facility, and I really wanted to buy it with my own money. So I ended up buying that self-storage facility versus this short-term rental. But I still, to this day, I want to buy them because it's like a romantic thing. It would be nice to be able to own a self-storage or a short-term in an area that I actually want to visit. And I've heard, I had a guy on the podcast who he bought a short term in Nashville, and it cash flowed. I think it was like $7,000 or $9,000 a month. And I heard that, and I was like, "You got to be shitting me! That is insane." I'm sure that's an outlier. Nashville, it's a really popular area.
Yeah.
But regardless, it's a very popular strategy, and it's one that you can talk to us about. So. I told you before we got on here, we always like starting with stories and hearing how people got to where they are. So why don't you start us off and tell us how did you get started in real estate in the first place?
You was in finance before, and I hated it. I built it up. I built up the finance business to a point where I was actually good. Like I was in a very good position. So I kind of proved out to myself that I could make it work, right? And at that point, I then got to the point where I was like, I want something more exciting, more fun, whatever it may be, right? And real estate, for whatever reason, is far more fun than when it comes in comparison to finance. And so I, downloaded the Airbnb app. I had an extra room, and I rented out my spare room and ended up learning a ton just from that experience alone. And it has just been a nonstop grind ever since then, right? Of just like learning and growing and doing more and more. And eventually got to the point where I just sold off the finance business and then started opening up Airbnbs through the rental arbitrage and property management model. Then COVID came around and wiped that away. And the one thing that I realized that I did really well within the Airbnb business was actually studying data. So I could spot winners really well, and figure out ways to get properties with the least amount of risk. And that's what I do now 100%. So like within my company is an Airbnb data consulting firm, and our largest contract is with TechVestor, and we've helped them buy over 150 properties, and every single last one of those properties is cash flow positive. And we've now taken on individual investors as well, and we've found a slew of additional properties after that as well. And so we have a really, really good track record of finding cash flowing properties when it comes to Airbnbs.
Yeah, 100%. That's pretty good.
100% is really good.
So really cool. I mean, you started just by renting out your own room, or a room in your house. Does Airbnb? I heard they stopped allowing that, or is that the case?
No.
Can you still
rent? No, they still do it. They still do it. Yep.
Okay.
Yeah.
So it's just based on location on Metro. Certain metros won't allow you.
Yeah, I haven't heard of them banning the idea of where like you can rent out your spare room anywhere. I know VRBO, like all of their marketing is kind of targeting at that as like, oh, that's an issue, that's bad. That might be where you're hearing that from. But
got it.
Yeah.
So yeah, really cool. So you are an expert at finding good deals, good Airbnb deals. I would love to learn a little bit more about that because Airbnb, there are costs associated with it that are much different than having a single family long term rental.
Oh
With
yeah.
Airbnb, you have a lot more turnover. There are actually I can't even speak to it because I don't run one. So why don't you tell us when you're
Yeah,
looking
no.
at these deals, what is it? What do you see, and what is kind of like a green flag that indicates that it's a deal for you?
Well, there's companies out there that have all the Airbnb data that exists, right? So there's a company called AirDNA, and it records calendar of every single Airbnb, and then it is able to figure out what the annual revenue is for these properties, right? Like how well this property is doing as an Airbnb, which I find to be the most fascinating thing because it'd be super interesting if you knew exactly how much every single McDonald's made across the entire country, right? It'd be really easy to invest in McDonald's if you knew that. And that's kind of what it's like when it comes to Airbnbs. And so when I'm
Why do they have that data? Does Airbnb, because there's Airbnb, VRBO, I'm sure there's other
yeah.
ones. Do
So
they just
they're
like give them the data or?
no, no, I wish that would be amazing. No, but what they're doing, Airbnb and VRBO are public websites, and you can create an algorithm to go scrape that website, and you can actually pull information out of the website. And so they have algorithms that go
Oh,
into the Airbnb website, everybody's individual listing every single day, and they record all that information. And then they have data scientists who will then take all that information and figure out what they believe they're making on an annual basis, right? They do some algorithms to be like, okay, how much do we believe that this property actually made based off of all the data that we were able to scrape from their calendar over the past 12 months,
got
right?
it. So like when a property, goes off market because they're assuming that it was rented, and so they can count that as an occupied
Exactly.
day in the calendar for this particular property or something like that.
Exactly. Yeah. So they're recording the
Interesting.
calendar. They see that every single day it's $100, right? They're like, this person has their property available for $100. Every single day is available. They record it. Then they come back the next day and they realize that one of those days is blocked off. And they go, they
Interesting.
probably made $100 that day. And then
Yeah,
they
reasonable.
will add that up over the full 365, right?
Huh. Okay.
Yeah. Now, with that being said, there's an outrageous amount of errors
Mm.
and issues and mistakes with that data. And so you got to be super cautious. I talk about it on every single podcast, every podcast. Got to
Yeah.
be caught. Got to be cautious of the data. So going back to this idea of like the green light, right? How do you know when you have the green light? What I'm really looking for is something called a 20% rule. So the price to rent ratio. If I'm buying a home for 500,000, I want to feel confident that it can make about $100,000 a year because it will then cash flow at an amount that I am happy with. You can buy a property that makes less and it will still either break even or cash flow at some amount, but I like the amount that it cash flows at that number, right?
So you
So
said so
yeah,
you want the gross revenue, annual gross revenue of this property to be 20% of your purchase price.
correct.
Interesting. Okay.
Yep. Yep.
Yeah,
And
that makes a lot of
sorry, go
sense.
ahead. Yeah, that works great for like homes that cost between 400 to let's say like 700,000, kind of in that range. If the home costs less, the price to rent ratio needs to be higher. And then if the home costs more, it can be lower. Just to point that out because I've had a lot of people point that out to me.
Okay.
So yes, that's the main thing. I'm studying, like as an example, I studied a market this morning, found a ton of good data. I found a ton of homes that were making between 120 and $180,000. And then there was a bunch of homes for sale that were for sale between 500,000 and 800,000. And so a lot of those homes are going to fall perfectly into that 20% rule, which means that I would then at that point try to hyper focus that market even more so and try to figure out like how could I have a competitive edge over these current listings that already exist, like what could I do differently than what they're doing, and then try to find a property at the cheapest possible price that has the most competitive advantages and then put it together in the most optimal way. And that's how you go 120 for 120.
Boom, man. You sold me already. Uh, so I mean, one of the big things, not only in Airbnb and in everything you invest in, every asset class, um, but specifically for Airbnb, investing in the right location matters significantly. If you're investing in downtown Pittsburgh, it's a lot different than I don't know, some nice area. I can't even think of one right now, but uh,
Like a
choosing a
vacation
metro.
town, you're saying?
What's that?
Like a vacation town, you're saying, or are you
Yeah,
referring?
so yeah,
Yeah,
like Hawaii, whatever. I don't know.
right,
Hawaii doesn't even
right.
allow Airbnbs, but
Yeah, it's very
but if
difficult.
you're investing in like a coastal nice area versus some gritty downtown,
Mhm.
it makes a difference. And so choosing a location to invest in is one of the in from where I stand, one of the most important steps that you take. How do you identify a good market, and how do you know whether you're going into a market that is good for Airbnbs?
So it's the first things you got to have good regulations, right? Then you want
Is
home
there is
prices.
there a tool that you can use to do that, or do
No,
you just got to
very
Google it?
manual. A
Okay.
bunch of people have tried. It hasn't worked out. So it's very manual. Just go and look at there's different ways to figure it out. But you look up the regulations, and then from there, it's this is the part that people miss, I actually think the most is understanding what makes real estate good. Like what's good real estate compared to bad real estate. A lot of people in the Airbnb world don't comprehend the difference.
Hmm.
They are just looking for cash flow. And
Hmm.
then they buy a property that's overpriced, that's overvalued, like overpriced or needs a ridiculous amount of work or just wouldn't never be a good purchase unless it would be like a primary home. And then they try to turn that into an Airbnb to make like maybe $20,000 a year if they're lucky, right? And it's like, well, that
Got it.
doesn't make a lot of sense, right?
Yeah.
So you want to buy in an area where the properties are not overvalued, where the real estate is, going up, not down. You want to make sure that the real estate you're buying is not uh,
So the
really, really
fundamentals need to be there.
exactly.
Yeah.
Thank you. Fundamentals need to be there, right? So that's kind of good regulation, good fundamentals with the real estate. And then you want demand. So you want some sort of demand for travel because
Hmm.
we're in the travel industry, right? So, you know, but
And
you got
that
to
doesn't
balance.
necessarily need to be vacation travel. It could be business travel. It could be, I
It
don't know,
could
what other
be. I
kind of
I always
travel
go
there
for
is.
vacation travel.
Okay. Okay.
So yeah, because but the business travel they just don't pay as much. There's just so what you're getting is that vacation premium, right? If I'm
Mm,
going on a
hmm.
business trip, is what it is. I'm gonna try and get cheap, nice cheap option. It is what it is. But if I'm going on vacation, I'm spending extra dollars because I am treating myself, right?
Hmm.
And
Okay.
getting something a little nicer. And so yeah, I like it to be in the travel locations. However, with that being said, I don't go to like the number one travel vacations. I like the
Okay.
number two sort of areas, right? But that still have a lot of demand, but aren't like the best of the best and the greatest places to be. That
Yeah,
makes
that makes
sense.
sense.
Yeah.
Um, so when you're looking, are you only looking at single family, or do you also look at like condos, stuff like that?
I right now I'm only looking at single family,
Okay.
and that's mainly due to the biggest contract that we have. Like we have a bunch of different contracts with a bunch of different people that we help find them properties, but the biggest one that we have is 100% focused on single family homes.
Okay.
However, I have a huge interest into flipping motels. I think there's a
Motels. I
yeah,
man, I my fiance really likes. I don't even remember the name of the show, but there's a show out there where they do that. They flip motels. And
yeah.
I've watched it a few times, and I'm like, man, that looks like fun. There's going
There's
out there,
there's
doing the
yeah.
design.
Is it called
So
June Motel by any chance?
I couldn't tell you.
Okay,
I've never
okay.
like come on to the beginning of
Gotcha,
it,
gotcha.
but yeah,
But yeah,
I like the idea.
there's it I like it because it's commercial real estate rather
Yeah.
than and so you sell based off of NOI. And so if I can
Hmm.
just get that nightly rate up, which I know how to do really well, I feel like it'd be a pretty easy thing to do, but I haven't done it yet. So usually when you're speaking about something you haven't done, there's a lot of ignorance in what you're saying, right? Because you just don't know.
Hey, man,
So yeah,
but there's always that. That's always the case. There's always going to be
yeah,
ignorance. You just got to pull the trigger and learn as you go.
true.
Learn,
Yeah.
have some conversations with people who have done that. That's the best way to learn at the
Well,
beginning. But
can I give a quick little 2 cents on a little bit of advice that something you said that scared me and I want to jump in and say it, but I was like, I'll just wait, which
let's
is the
hear it.
fact
Yeah,
that
yeah, yeah.
you wanted to buy a home, you wanted to buy a vacation home in a place that you like to go vacation.
Okay.
Right. That, if I just be very straightforward, that is where I see the majority of the mistakes happen in the Airbnb game. The majority
Interesting.
of the mistakes, right?
Okay.
Because usually the place that you like to vacation isn't always the best place to put your money, right? So I think my financial business that I had in the background back in the day really helps with the Airbnb business because I always see everything as like, okay, is this the best use of dollars? Right.
Hmm.
So
Yeah.
there's kind of two ways of thinking about this. Is it just going to be a vacation home that you want it to pay for itself that you can then have and, appreciate with the real estate? And you don't give it, you could care less if it was like a really good investment or not. Right. That totally fine. Go for it. But there's a ton of people who want to make a good investment, but they also want it to be in their favorite vacation place. And so then they force it to happen. And that's not,
Mm,
and that's
yeah.
where overbuying the real estate. They are getting a home that has no competitive advantages. And then they are essentially working a part-time job taking care of that listing for the entire year just so they can enjoy it on their own. Where in reality, you could take that money, throw it into an Airbnb on the other side of the country. That would be a great investment for those dollars. It makes you, $3,000 a month. Then you take the profits from that and go on vacation in your favorite vacation town. You know what I mean? And like to me, I'm like, that makes so much more
Shooting my
logical
dreams
sense.
down. Thanks a lot, man.
My thing is like when you but the thing is if you're okay with it breaking even, if you're fine with all that, then like that there's no harm, no foul. right? Because it is more of a place just for pleasure, right? But in my opinion, like me personally, I've got to be in a really good financial place to be able to put that money to a place where I know it's not really going to do much, but I'm going to
Mm-hmm.
just be able to enjoy that place,
Yeah.
right? So anyways, just throwing that out there,
No, no,
just
no.
to
That
keep
is a
that in
good point.
mind.
That
Yeah.
is a good point.
Yeah.
So you've mentioned management a few times,
Mhm.
and that is one thing that's actually steered me away from Airbnb because I know I always like hiring property managers, third party property managers. I like to just do asset management. And I really don't want to be in the weeds. But I know if I were to buy a single Airbnb, I really wouldn't be able to get a good property manager. So I'd probably have to do it myself. And the idea of managing a Airbnb, again, I have no experience, so I'm talking out of my ass here. But the idea of buying an Airbnb and managing it sounds difficult. Is that accurate, or how is the management gone, and how do you manage your properties?
So I actually don't manage any properties personally right now.
Okay.
I'm just on the data side. However, I did manage 15 at one point. Um, there is a heavy lift at the beginning, and there's sort of an equilibrium. I'm not sure if that's the right way to explain it when it comes to managing Airbnbs. So when you have just one and you get it set up, if you have like a good cleaner and you have a good handyman, it's very simple to take care of, right? Because the cleaner is going to go in there, take care of it. Maybe you can also pay them to go buy an air mattress so the air mattress pops, and you're just paying them to do those things, right? And the handyman will take care of the property. You're just messaging the guest. The pool person takes care of the pool stuff. It's really not difficult, right? And it's a fraction of your time to be able to do it. Yes, you're gonna have a couple nights where you wake up at 2 in the morning because the person's locked out and you're gonna be super frustrated by that. But you're not paying somebody 20% of all of your revenue to handle a couple of those inquiries, right? And you can take advantage of the STR tax loophole because you're putting in participation and all this different stuff, and you can write off your active income. So there's a lot of advantages to that. Now, once you hit like three, four, five, things start getting more complicated. It starts becoming more of a part-time job, right? But then you get to a point where you actually have so many of them. And if you get the right ones, you have enough cash flow where you can then hire somebody full time to just take care of them. And then you go from uh doing, most of the work to doing next to nothing. You're now back to asset management. So you have to get past that hump is the idea, right?
Yeah.
Yeah. So I mean, if you have a property that if each individual property you get makes $25,000 a year, after of like free cash flow, after like the fifth one or the sixth one, you can more easily hire somebody to run all those properties, maybe on like a part-time basis. They're taking care of the messages. Could be a VA who's handling 99% of everything. You're just dealing with like the big time issues, stuff like that. So but I had 15 at one point. I had 15. I also had a cleaning company and I had one person who ran everything and I just dealt with the bigger issues. And that's where I got really into the Airbnb data. I had a crazy amount of time on my hands and I just started learning the data even better. And so like when you see that stuff online where people are like, yeah, I only work 5 hours a week on my Airbnb portfolio. It's like, yeah, once you get to a certain point, it turns into that, right?
Yeah.
But you can get to that point, right?
Yeah, as it is with everything, and that's kind of like why I like the commercial side better, because you can get to that point with one property on the commercial
Yeah,
side
true,
versus
true.
versus five or six for
Yeah.
Airbnb. So 25,000, is that talking cash flow? What is the average that somebody can expect for a single Airbnb? Just in a regular metro, not talking like downtown Honolulu or something, just
Yeah.
regular.
Well, so I know where to find properties that cash flow between 25 to 70,000 like pretty comfortably. But not a lot of other people do. If I'm just being
Mm,
like very straightforward. So a lot of people are struggling with trying to find properties that will cash flow at those amounts. It's definitely possible. You just have to do your homework. And you
mm.
got to do a lot of homework, right? To find the right market, to find the right amount of revenue, to find compared to the purchase price and whatnot. But I know that it's possible to find those numbers, and I have seen other people that have found them, but a lot of people are struggling to find those numbers right now.
Got it. So right
Yeah.
now, what is I don't even know what is average for a
I honestly don't
property.
even, I genuinely don't know
You
what
only
other
look
people.
at the killers. That makes sense.
Yeah,
That's a good way to go.
exactly.
Just
I'm not wasting my time with the other ones.
yeah, that makes sense to
Yeah.
me.
Yeah.
Right on, man. Well, hey, I just took a peek at the clock. It looks like we have run it down, so it's time to jump in the quick question round. Are you ready?
Let's do it.
All right. Starts with books or movies or podcasts, whatever. I just need two recommendations, one for general life wisdom and then one for real estate.
Atlas Shrugged is my favorite book
Nice. Yeah.
of all time. Yeah, I've gone through that one a lot. And then one for just general real estate, it's like Money People Deals. Is one that written by a Canadian. It's about doing joint venture deals. I've read like half of it, but the front half was all of like how to actually do a JV deal. The second half was all like how to uh be better and all that kind of stuff. And I've self-help books, and I just didn't care for that part. But the first part was great. So I've
Nice.
read a bunch of the other self-help books, and I'm like, I'm good. So I just wanted the practical stuff. Those are
Right
my
on.
two book recommendations.
You're the first person to say Atlas Shrugged. I used to be a true Randy. I read every single one of her books, but I haven't. That was back in my early 20s, and when I had a lot of spit and vinegar in my in myself. But yeah, that is a great book.
Yeah,
Something I would definitely recommend, especially for your younger years.
yeah, man,
Um,
I upset. I love that book so much. I remind like it just is like a good way of looking at the world. I know there's a lot of flaws in it and all this different stuff, but no one else is gonna do like you can't rely on anybody else to do it. It's got to be you, right? If you
yeah,
want anything to happen, you have to do it. It's as simple as that. And the harder you work, the more value you feel for yourself, right? And that's
yep,
really like the main things that I get out of that book. I just want to prove to myself that like I am good, I'm valuable, and I can do what I say I'm going to do. So,
yep.
yeah.
Yeah, it's Ayn Rand. She probably wasn't a very pleasant person to be around, but she
Probably
definitely
not.
had
No.
definitely had a good message to put out there.
Yeah.
All right, next question is for your younger self. Let's go back to the John who had no experience in real estate. He was just getting started. Go back to him, look him in the eye, give him one piece of advice moving forward.
That's a great question. Give me just a half second. My advice would just be to focus on purchasing, like more than anything, purchasing and raising money to do joint venture deals and things along those lines. That would have been like what, however I could have learned it, right? Whether it be through books or podcasts or talking to people or whatever it is, just put all of my energy into that. I think would have been I would have been 10 years further ahead than where I am right now.
I'm going to put that in the same bucket as I wish I got started sooner, is focusing on purchasing. We're keeping kind of a running tally here because I would say 90% of the guys that show up on the show, and you're episode 500 and something, they all say that they wish they got started sooner. Every time somebody has that piece of advice, I always like to point it back at you listening to this episode. If you have not gotten started in real estate, take the advice of everybody that comes on the show and just get started. They all wish they got started earlier. So if you haven't done that for yourself, go out there, just get a deal done. It doesn't have to be anything, it doesn't have to be a slam dunk. Once you just get that first deal done, it'll start to snowball and you'll start to get more confidence, more understanding of how to get deals done. So you won't regret it. Just go out there, get your first deal done. All right,
Agreed.
next question is about the US. It's a big place. There's a lot of opportunity. This is a good one for you. What is the metro? Could be the US, could be Canada, anywhere. What is the metro you're most excited about investing in today?
First thing that comes to mind is Austin.
Okay.
But the problem is that I actually don't tell people to buy in Austin just because the regulations when it comes to short-term rentals.
Hmm.
But if you were to like, if you're asking me where do I think is the most exciting place to be, I think it is Austin, truly. We've got LA, you've got Chicago, and you've got New York. And I truly believe like Austin is going to be very competitive with all those over the next coming years. The home prices are already through the roof, which is insane. But there's the metro, there's a further out, right, of Austin, and it's continuing to scale. And Austin's very close to San Antonio. Like
Hmm.
they're extremely close to each other. And so they're gonna I don't know if they'll grow directly into each other just because the middle of
Like
it,
Dallas and Fort Worth.
kinda. Yeah, honestly. Dallas and Fort Worth, that's a great example. But yeah, that's probably the most interesting place. And then on top of that, the regulation and taxes and everything within Texas is far more favorable. I would say it's like the last that there in Florida is like the last true America, right? Of what America was, and even that's kind of fallen behind. And so people who love America and love what America stands for, they're just going to keep moving to Texas like they have been. And so that's why I think Austin is going to continue to be a great place.
Right on. I've actually heard a lot that Austin is overvalued,
Oh
but I
yeah.
do believe it's definitely, continuing that growth curve. So
Yeah,
uh,
yeah.
And I'm sure it's different for Airbnb. I'm sure, they're talking about single family housing, but
It
Airbnb,
is
there's still a lot
definitely
of people.
overvalued. I would say it's overvalued. I'm not saying it's not overvalued. It's definitely overvalued. Like there's multi-million dollar homes that should not be multi-million dollars. And I'm like,
Yeah.
this doesn't make any sense. But it's the outskirts or like where demand will continue to go, right?
Yeah.
Yeah.
It's funny. This is kind of a side comment here, but I remember in it was like 2018. I was looking for a house to buy, and I kept thinking like, oh man, prices they're way too high. I'm here in Seattle, and I'm like, they're way too high. They're definitely going to go down. 2019 happened, way too high. Definitely going to go down. It just kept going up, and you're just like, how could this possibly happen? So,
It's extremely confusing when you look at things, it just doesn't make sense. How can people afford this? But people do, and that's why it's confusing. Like
yeah,
anyways, we can have a
there's a
whole
lot
other
more money out
conversation,
there than people think.
I guess, right? Yeah.
All right, that leads us to the next question. This is about finding good deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what's your favorite way to generate leads and find new deals?
We find almost all of our deals on market.
Oh, wow.
Yeah, we're not the guys going out there trying to find like these creative deals or anything like that. So we're just on market, what works on market, and we have good success with that. So I'm
Just
not the best person to answer that one.
yeah, no, I mean that is a strategy. There is
Yeah.
plenty of deals out there on market. Granted, most people do like off market deals because you can generally get a little bit lower of a price, but if it pencils and it's on market, screw it.
This
Money's money, makes it work.
the problem, I'll just say the problem with we've tried it many times. The problem with trying to get the off-market deals in the type that we're getting is that we're in good areas.
Ah,
So there's barely anybody who's in distress, right? There's
yeah,
barely anybody who's like underwater. And so it almost never works or makes sense to try to do that in the first place. It's not worth it.
yeah, that makes sense.
Yeah.
All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, a lot of times something goes a little bit sideways, but that's where we learned our best lessons. So, what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
I don't have one specific one in mind, but I will say that when it comes to Airbnbs, I we have made a couple of purchases where the home was either too small or didn't have what we call competitive advantages, right? So, as an example, like if you bought a home that was on the side of a mountain, there's no land because it just goes straight down. And so you can optimize that interior in the most amazing way, but you can't really do anything else other than that. And so you're capped at the ability of how great you can make that property.
Mm,
And so then therefore, if you buy a property that has maybe some land or some bigger interior like room to grow into it, you're going to be able to continue to compete as time goes on, right? And so that's we have bought a couple of like smaller properties and smaller lot sizes and stuff like that. So we try to avoid that nowadays.
yep, that makes a lot of sense.
Hmm.
All right. Next question is about raising capital. You've already mentioned that this is one of the most important things. So, it does take money to make money. What's your favorite way to raise capital for deals?
So I have raised capital specifically to open up my Airbnb arbitrage business back in the day, but not specifically to do a joint venture deal for properties that I own. I have been a part of an investment fund that has raised $70 million, but I was not the one raising the money in the first place, right? So, but what I will say is that I think that the joint venture deals definitely have like the best. How do I put this? I'm a little bit out of my element on this one. But what I see is that the joint venture deals are kind of the best way to go right now with short-term rentals because it does cost a lot to be able to compete in some of these markets because you got to put like pickleball courts in, you got to throw a ridiculous amount of money into the furniture, things along these lines to like be that top performer. So you need like 200, 300, $400,000 sometimes to really make it win in these areas. And not a lot of people have that money themselves, and so they're coming together with people to make that work to create that cash flow that they're looking for. So JV deals have been the thing that we've been seeing work the best with a lot of our clients. We have a lot of clients who are doing JV deals and then hiring us to be their person to find the property for them.
Cool.
Yeah.
Pickleball courts. That's something I would not have thought to put into a
Oh,
property to make it
oh man,
competitive. Yeah.
we got to talk before you buy a short-term rental, okay? Reach back out
Well,
when that
after
time
this, I'm
comes.
definitely going to stick to self storage facilities. It's short
Okay.
term is probably not in my best interest, but all right, that leads us to the very last question. That this one's for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way they can find you, and then how or what can they expect when they reach out?
I strongly recommend for everybody to go look up my free information. So I've put out 6 free Airbnb data courses. I always give out all of my course information for free. And so one of my courses is 40 hours long. It goes a step-by-step process teaching you exactly what I did to be able to find the 150 plus properties that are all cash flowing. So you go to my website, strsearch.com, top right corner says free courses. Just sign up. I promise you, you will not regret it. If you don't want to do that, find me on YouTube. I've got all of the courses there as well. So at the Airbnb Data Guy or John Bianchi on YouTube, and you can also find me on Instagram. I've got a fun bunch of fun little content on Instagram and TikTok at the Airbnb Data Guy.
All right, perfect. I'll put that link in the show notes. So if you guys want to reach out, just click a little more in the description. It'll pull down that full description. In there, you can find John's link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thanks for having me, man. I appreciate it. This is fun.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.